This is from Israel Jones. So he says, will the monthly payment owed balance out with the interest rate amount? So he gives an example. If the mortgage payment is 1,500 and the interest is 6%, which we will call $500, would it be the same amount owed if the mortgage was $1,200 and the interest rate was 4%, which we will call 375? I'm sorry this is so long. I hope it makes sense. Sintra Rex Carter invited me. I'm extremely happy to be here and build wealth.
Let's see if we can break this down. I think what he's asking is, will one cancel the other out? Okay. We have an interest rate of 6% and another interest rate at 4%. All right. Will it balance out and be about the same interest cost along the way? All right. So here's what we're talking about, Israel. If you want to make every single payment of those 360 payments, if you're going to make every single payment, then you want the lowest interest rate available because you're going to make all 360 payments. Okay? Now, the reason why we're talking about this is because our clients generally pay off their loans in 7 to 9 years. So if you have a 30-year mortgage, that's 360 payments. But what if you pay it off not in 360 payments, but what if you want to pay it off in 84? That's 7 years. Okay? Now the interest rate actually comes into play when you're trying to accelerate to pay off the loans. So what interest rate makes it easier to attack the loan? That's what we're getting at. So if you have a lower interest rate, that means you have a higher principal payment. So let's put it up there. All
We
right.
got it up.
So now, if you can see what we're talking about, folks, at a higher interest rate of 6% on $200,000, our principal payment is right around $200. So to get rid of any of these payments, if you pay the $200 before the next payment is due, you get rid of that line on the amortization schedule. It's gone for $200. For here, let's say you make your mortgage payment here, and let's say, oh, I make a payment and I'm going to look at the principal payment on line 2, 3, and 4. Okay, that is 200 plus 201 plus 202. That's $603.30. If I prepay the $603.30 before next month's payment is due, I knock off these 3 interest payments. I knock off these 3 months, and my next mortgage payment is actually on line 5 of the schedule next month. But if I lower interest rate to 3% instead of 6, all right? And look here, $600 only takes out 2 payments. $600, look at that. $600 only takes out 2 payments. So if I'm going to effectively attack the loan, I want to make sure that I can control the principal payment to make it easier for me with the money that I have to work with, how to attack this loan aggressively. Now, let's go back here and I'll show you one last thing here, Israel. If you take a look at this, you see $2,456 and a penny, all right? That's how much principal would pay down in 1 year. That's all the principal payments added up. Now, it's at the higher interest rate. By giving the bank that money, I do not have to give that 245601 bank over 12 months. I could give it to the bank in 1 month if I had it. If I gave it to the bank on month 1, they have to subtract $2,456 and a penny from the $200,000 that I owe. It will bring me all the way down to line 12 and owing $197,543.99, and my new mortgage payment for next month will actually be on line 13. So, the higher the interest rate, the lower the principal payment. The lower the interest rate, the higher the principal payment. And if I attack this loan with the same $2,400, it only eliminates 7 lines. What does Israel have to say, man?
Oh man, he's saying that is so amazing. He says, Don, you answered my question eloquently. Israel, this is what we're going to ask, man. There's a couple of things we want you to do. Number one, we want to make sure you hit that subscribe button right there. You're on Facebook, so, you can follow on Facebook, but we would love for you to hit that subscribe button on YouTube as well. And if you want to know some more, man, definitely tap in with Don at ice10k.com and get yourself a savings and earnings report. If you like this answer, trust me, you're going to like that savings and earnings report. I am not only his producer, but I'm also a client, so I can tell you from experience that savings and earnings report, it definitely helps you to make some decisions. So he says done. He says done. I love it. Thank you, Israel, man. Appreciate you, man.
But Don has some valuable information that can contribute to the quality of a person's life, and it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.